Hi there, good afternoon. This is Your Stocks. I'm Mangla Malu. With me is Sumaira Abdi. We're sitting in this afternoon, which has been a rather news-heavy afternoon. Over the last 1 hour, we've got news coming in from the Supreme Court with regards to the telecom sector, and that hasn't gone down too well with the telecom stocks as well as the banks, and which explains the fact why the Nifty is down almost 125 points from the highs. The other news that we got over the last 1 hour was Maruti's results. So we'll take stock of all of that over the course of next half an hour. We're awaiting results coming in from the big boy from the consumer space, ITC, and some mid-cap companies like Colgate, etc. as well. Hi Sumaira, good afternoon.
Hi Mangram, good afternoon. And today we've really got opinions in plenty, news in plenty, earnings in plenty, and that's something that we'll be tracking through the afternoon. So we'll also have the management of Maruti joining us shortly, but before that, here's our CNBC-TV18 special. Earlier today, my colleagues Sonia and Anuj caught up with the big bull Rakesh Jhunjhunwala. So let's hear out what he thinks of the government's recent tax reforms and his take on the NPMS.
There is some kind of a fright in the business community. Now, I don't know the reason why, right? But I think government is now trying to assuage the feelings of the business community. $17 billion has been remitted outside India under the LRS scheme. I don't know why people are remitting this kind of money outside this country. So we have to take steps. It's like my son. He may be, he may start crying for no reason. He may say, I don't have my food for no reason. But then I try to console him. So the question is, the business community is frightened in India. We need to awaken the government spirits, their animal spirits.
But do you think the worst of that extreme pessimism is now behind us? We were speaking to L&T earlier in the day, and they mentioned to us that private capex has not picked up just yet because of whatever reasons. But are there any green shoots that you notice?
See, private capex will pick up as soon as consumption picks up. If steel consumption goes up, steel plants will come up. If cement consumption goes up, cement plants will come up, right? So it's mainly linked to consumption. I don't think capex is not picking up because capital is not available, or loans are not available, or equity is not available. I think capex is not picking up because there is excess capacity in the system. So I don't think that necessarily capex is not going to. Capex is going to come when when consumption goes up. And see, this is all what I would say a vicious circle. And also, I think the government's ability to incur capital expenditure has been severely curtailed because of the subsidy schemes, especially by the state governments. This competitive, what I would say, competitive populism. But I think in a democracy, self-correcting measures will come.
Okay. Rakesh, let's talk about some broader issues. Backbone for our market is the financials, right? Financial system. You were quite confident that the worst of NPA cycle is behind us.
Right.
Now we've had instances like RBL, for example, and the way that stock has fallen. IndusInd Bank is seeing some fresh problems. Do you see these as company-specific, bank-specific problems, or are we staring at one more round of financial crisis?
As of now, the NPA problem in the last 5 years has been in the corporate sector. And I still believe that we are at the tail end of the NPAs for the corporate sector, right? Now, we don't know when the economy slows. The foreigners' first concept is that there will be retail defaults. As of now, banks are cautious. There have not been any retail defaults. But I still hold my opinion that as far as corporate defaults are concerned, we are at the absolute tail end.
All right, that is Rakesh Jhunjhunwala saying that we are at absolute tail end as far as corporate default is concerned, but there has been some fright with regards to the corporate sector and businessmen in the country, and that's reflected in the market moves that we saw post the news that came in on the telecom sector as well. But in an afternoon full of gloomy screens as well as stocks which are losing, there is some good news. India has jumped 14 positions up in the ease of doing index in the World Bank's 2020 report. This has placed India 63rd on the position out of 190 nations. Rituparna Bhuya has the report from the World Bank, and he joins in with all the details. Ritu.
14 places. That's how much India improved its position in ease of doing business rankings, which was released in the morning today. Current position stands at 63 compared to 77 last year. And not only that, for the third consecutive year, World Bank recognizes India as the top 10 reforming countries in terms of its procedures and rules related to business. Let me take you through how this ranking was achieved. There are 10 parameters based on which a country is ranked. In 7 of them, India has improved, but on 2 of them, India has actually slipped in the index. For example, in starting a business, we improved by a position from 137 to 136 this year. In getting electricity, we improved by 2 positions from 24 to 22. In resolving insolvency, we improved hugely. Current position stands at 52 versus 108 last year. Clearly an impact of the IBC related norms. The World Bank also made interesting observations regarding the reforms that India carried out. Let me just take you through one of them, and that is regarding resolving insolvency. While recognizing that India has made it easier to basically carry out reorganization related procedures, the World Bank also observes, and I quote, it made it difficult by not allowing dissenting creditors to receive as much reorganization as they would receive in liquidation. So clearly, mostly recognizing the reforms that India has carried out, but also pointing out that there are still issues on which India will have to focus on if it has to continue improving its ranking in the future, ease of doing business related in rankings. With that, it's back to you.
Ritu, thanks very much for that. We'll take a very quick break, but when we come back, the focus is on more market analysis and what's really going on. Do stay tuned in. Welcome back. Well, the market continues to remain weak, but a lot of big numbers are expected today, and one of the bigger ones will be ITC. So, Manglam, it's lunchtime. One would have thought that ITC numbers would have come by now. But nevertheless, what is the street factoring in?
Well, it looks like the numbers should be out in the next couple of hours, maybe in the market hours itself, given the fact that the board meeting is currently underway. But for whatever it's worth, as far as the stock move is concerned, it has been underperforming, down 19% from its 52-week high at a time when most of the FMCG companies are at record highs as well. And from a value perspective, also trades at around 19 times. So any positive move in the numbers could be important from a stock perspective, as the street will be looking at ITC then. Revenue growth of 6.5% is what the street is working with, 11,804 crores. EBITDA growth just ahead of revenue growth, 7.8%, and that means a margin expansion of 50 basis points. The number you're looking at is 38.5%. But with a 6 to 8% revenue growth, we're expecting a 22% growth in the company's profit. The number you're looking at is just upwards of 3,600 crores, and that's primarily on account of the cost cutting, the tax cut that was announced by the finance minister. Cigarette volume growth, we're expecting a growth of around 2 to 3%. Realizations grow by 3 to 4%. That means a cigarette revenue growth of 7 to 8%. And that is what would happen in the cigarette EBIT as well. Adverse product mix may lead to lower realizations despite the price hike of close to around 7-8% over the last 12 months. The FMCG business, we're seeing the 7 to 8% growth out there as well, with EBIT margins seen between 2.5 to 3%. The important factors, it is cut in corporate tax rate will support the net earnings growth, and higher tobacco leaf prices and higher salience of capsule cigarettes are already in the base, so that should aid margins for this quarter, though there are a fair amount of headwinds for ITC as well. Recovery in cigarette volumes, that will be the key trigger, but the company is losing incremental market share to other players like Godfrey, VST Industries and the smuggled cigarettes as well. So let's see how that pans out, and the numbers and management commentary, something I'll be watching out for.
Okay, so let's get in some more from our Diwali specials. The big bull Rakesh Jhunjhunwala, well, I'm sure the viewers can't get enough of him. Spoke a lot to my colleagues Anuj and Sonia about the current market scenario, the sectors he likes, and the outlook for the market itself.
There is a lot of disillusionment around, and I don't know, the press is making out to be as if, I don't know, it's the end of the world. Kabhi khushi, kabhi gham, this also shall pass. I don't think, things are as bad as people are making out to be. And suddenly in the last 10 days, the market is technically saying that it has bottomed out. I, for one, feel that the path is upward, but it could be a slow and crawling path. I don't expect a big rise in a very short time.
Okay. So when the bottom has moved up, the 10,700 panic bottom that we saw, after that we had that corporate tax cut. After that the market...
9,700.
10,700.
Yeah.
Yes. After that the market gave up some ground, went to around 11,100, 200 and has again bounced back. So you think 10,700 or 11,200? What would be a reasonable bottom to work with for market?
I would say around 11,000.
Around 11,000.
And suddenly, you see, the market is a discounting mechanism. So maybe a good recovery is 6 months to 9 months ahead of us. But market always recognizes things in advance. And as far as Diwali sales go, in the last 2-3 days, I am hearing that sales have picked up. Festive sales are good. So I personally think, see, there are 3 aspects. One is consumption, one is investment, one is exports. I think consumption will come back in a big way in a short period of time. Investments will take time and exports will take more time.
All right, there has been a bottom which has been made for the market, says Rakesh Jhunjhunwala. Meanwhile, a lot of stocks recovering from the lows. Bharti Airtel, case in point, now sitting with a cut of just about 1.5%. That means it's recovered really nearly 9% from the lows that were hit during the day, just as the verdict from the Supreme Court came in, where they upheld the definition of the AGR by the DOT, or the Directorate of Telecom. The other stock that is buzzing right now is Asian Paints at the highs of the day. Alongside that, we also have a handful of other stocks from the broader market. Case in point, Castrol, which is sitting with a gain of almost 8% on the back of a good set of numbers. Remember, the company reported numbers yesterday. The margins expanded by 420 basis points. But we're talking stocks, we're talking markets. We have Harsha Upadhyay, CIO Equity of Kotak Mutual Fund, who's bullish on the broader markets itself. He says that the stress in NBFCs, though, will continue. Listen in.
Market has seen more stability since the tax rate cut announcements, and also if you look at mid-cap segment, while the mid-cap index may still be underperforming Nifty or Sensex, clearly some of the mid-caps which have a healthy balance sheet, which have reasonably steady demand conditions, have all moved up quite a bit in the last 1 month. So clearly the money is moving into the broader market where there is more valuation comfort, and that also gives us hope that market will consolidate at around current levels, and hopefully the next year is going to be much better than what we have seen in the past. Stress in the NBFC segment still continues, but maybe the frequency of negative developments or negative news flow will start to diminish as we go forward, in our opinion. Because since September of 2018, we have not really seen any money going into any of the NBFCs, and we have seen the problem of money not going into that sector in a different form. But clearly, most of the papers that were there from the NBFC segments were of a tenure of up to 18 months. So give or take a couple of months, I think we should not see too many news flow from this segment.
All right, those are numbers coming in from Gujarat. Pipavav net profit has come in at 68 odd crores. So that is substantially higher actually than what our own poll had thrown up, which was about 58 odd crores. The stock should be actually moving a tad bit higher. I'm just going to try and pull up the estimates if we have any. Mangalam, do you have okay, so the stock is down about 22 odd percent this year. The stock is down 7%. And in terms of a poll, the margins should come in pretty steady on a Y-on-Y basis. Likewise for the revenue, so 127 odd crores almost on EBITDA. Well, that looks good because our poll had thrown up a number of only about 100 odd crores. So I think at least so far the two numbers that we have appear to be a big beat.
Absolutely, and we also have the revenue, which is coming at 199 crore, which is a tad bit above what we were working with. So looks like a bit of a top-down beat coming in on Gujarat Pipavav as far as what the street was working with, and the reported numbers put side to side are concerned, and which is why the stock has now moved to the high point of the day with a gain of almost 2%. The tax expense, I was trying to look at it, whether that has also aided the bottom line. line or not. But suffice to say, it is the revenue beat as well as the EBITDA beat which has taken the net profit above what the street was working with. Net profit higher by 22%. We take a short break, come back, we focus on the stocks and get you an excerpt from our mutual fund simplified series up next.
A market leader in cash logistics.
SIS,